Hi everyone, very warm welcome. So we are recording this video a bit late in the evening by understanding the entire geopolitical situation and the data points which are actually affecting our portfolios. And as the thumbnail suggests, it is bigger than COVID. And I'll answer that very well into this video. So stay tuned till the end. I hope you'll find this video very helpful and it will help you to create a good mental model on how the investing works. Uh, Talking about the data points, we are down about 14% year to date. That is starting from 1st January till this point. We are almost down by 14%. The average return what Nifty 50 is generally making is about 12 to 12.5%. But I think more than that, we are down. So what does this implicate? First of all, let's understand why all of this is happening. And obviously, there are two reasons. One is the price rise in the crude oil, and second, it's the uncertainty, what we are going through. So market is always fine with the numbers. Even if the numbers are bad, market can stomach that sort of volatility and it can price in. But one thing what market is very sure it's not gonna like is the uncertainty. And this time it's at the peak. Probably not on the levels what we have seen in the COVID, but not too less what we have seen in the last probably 5, 6 years, right? So, how to calibrate our mind going in this situation? I'll give you a very interesting data point. In the last 25 years of Nifty 50, the average return what we have made is 12 to 12.5%. The average downfall every year on Nifty is 18.5%. And to a matter of fact, not even a single year in 2000 in last 25 years, Nifty has given negative returns. Then why are we afraid? I attached this thumbnail. It's bigger than COVID. And the very simple reason, markets are probably not that volatile at as it used to be in the when there was a lockdown and the COVID. And if I talk about March 2020, to be very precise, 16th or 17th March of 2020. Then the point is, at that particular point, we were all unsure about our lives. So we were not concerned about the portfolios. We were all having a thought whether I'll be alive or not. But at this point, we have a confidence that we will be alive, but my portfolio would be alive with me or not. The Nifty data point for the last 25 years sets a very good example. But as a disclaimer, we always say that past returns should not be constituted as a proof for future returns. And to clarify that part, I am not seeing any reason for the markets not to recover. Our fundamental growth story, our fundamental earnings story remains very, very resilient. The country is seeing a good growth, seeing all sort of numbers like whether it's GDP, it's tax collection, it's earnings from India INC. Everything looks very promising. Then what's the reason for concern? It's a human tendency. We get carried away into our human emotions and we don't look at the data. Once we start looking at the data, things get very clear to us. I have known a lot of people who have taken positions in silver when it was probably all time high, near all time highs. And today, the portfolios of those folks are down by about 50%, 40 to 50% on the value what they have invested. Hence, there is no reason for getting into the human emotion. If you have got into the human emotion and taken a wrong decision at this point of time, you will end up making a decision which you won't forget in your entire investing lifespan, and you won't be able to make a comeback to the markets. That's for sure. So these times are not for panicking. Point number one. We are strong in terms of data. We are strong in terms of economy, and geopolitical tensions are not permanent in nature. These things come and go. Having said that, what should I do with my investments? That's the very particular questions what we are getting on a day-to-day basis. On a contrary, I'm very lucky to have a very mature client base at Vestbox, and we are getting a lot of requests for putting in lump sum investment amounts, seeing the markets are a bit down. But is it a right time to put lump sum into the equity as an asset class? If it's more, if the amount is more than the 15% of your portfolio, the answer is no. You should definitely wait. What even we are doing with the portfolio, even if we are getting some amount, we are parking it in debt and then systematically moving it to equities. The second best thing, what we are actually emphasizing on, is to continue our SIPs. They are crucially very, very, very important. And these are the actual times where the wealth creation happens, where the accumulation actually happens. So, for a long term perspective, SIPs should not be stopped, redemptions should not be made. About being greedy, the time will come and we will come in front of us asking for money. If you are feeling fearful, don't don't just feel it alone. Indulge us in your conversation. We will help you out. And as I said, we don't consider our human emotions because they always tend us to be on the wrong side of the picture. Rather, we talk to data. I am always optimistically positive about equities, but this time I'm not denying the fact that fear is there in the market. The market is fearful. The market is not a gungu place to be in, but that doesn't mean we stay away from the markets. Even if the hurdle rate is actually very less. If I talk about the exact hurdle rate or the take home hurdle rate, it's near about 4.5% to 5%. So if you are having a fixed deposit that guarantees your fixed return, you are ending up paying 30% tax on it, which brings it down to 4.5 to 5%. And even in the last year, the markets were super choppy. The benchmark was up by about 4%. So how does it make sense? And remember one thing, stock market is always about non-linear returns. Having said that, active asset allocation is very, very important. And in all our portfolios, that has been taken care with utmost sincerity and utmost seriousness. So don't worry. If you are an investor at Westbox, need not to worry. You are in good hands. We are looking at each and every portfolio. We are not in a hurry to scale. We are there to care for every penny we manage. And we don't manage it like it's yours. We manage it like it's ours. So don't take a stress about it. Even if the portfolio health on the Vestbox app is not probably not 10 out of 10, we are having a check on each and every portfolio. Even if it's less, when the time will come, we will rebalance the portfolios. Don't worry about that. And the purpose of that feature is to give you a clarity what's going on. So leverage that, stay invested, trust the process, do not panic, and as I said, just stay invested for the long term. Thank you so much for watching this video. I hope you found it helpful.